Good morning, good evening, wherever you're watching me from. Here's some Jason YK again. All right, so free Zoom meeting with everybody on Telegram yesterday, and then some of the questions that came up. So that's why I want to make this video for you guys. And the purpose of this video is I'll be breaking down all the confluences I use for US30. For those of you that have been wondering, what are the confluences? What are the things I used to see before I enter the market? What are the things I used to see before I leave the market? I'm going to be breaking it down for you guys today. All the 6 confluences I use, how we apply them, why do we apply them? What are the reasons why we apply each of the confluences at every point in time? How if you're just watching, because I've checked my review, I see that a lot of people are watching the video, but you're not clicking on like and you're not commenting. If you're not commenting, man, how do you want to encourage me, guys? And please, when you're watching my video, don't skip that ad. Don't skip that ad. Let me get my money from YouTube. All right, guys. So that's number one. Then another thing, I'll be doing the outlook of what you guys should be expecting from the market next week. What you guys should be expecting from the market next week, I'll be showing you guys. All right, so without wasting much of your time, and I don't want this video to be too long, let me just take you guys straight to my screen. In case you don't know, this is Omojesu YK. I am here. I am your plug for today. So you're welcome to my screen. I believe everybody can see my screen. Just like I said before, so towards the end of this video, I'll be doing the weekly outlook for what you guys should be expecting for next week. But in the meantime, I'll be explaining the confluences that we use, and how you guys can apply the confluences accordingly. And then tomorrow or on Tuesday, I'll be dropping a video which I'll be interviewing one of my mentees, and she actually joined me in I think February 28th. Yeah, she's less than 3 months with me, and then she has been able to move 100 pounds to 450 pounds in the space of 2 months plus. So I'm gonna be interviewing her tomorrow, and she's gonna be sharing her screen, and you guys can actually see the progress. And we're not playing, man. We're not joking here. All right. If you're not my Telegram channel, my free Telegram channel is free to join. Just click on the link. The link is gonna be down below. Just click on it and it will take you straight to my Telegram channel. So without wasting much of your time, let me just take you guys straight to the confluences that we use on US30. So firstly, there are 6 confluences I make use of on US30 before we take a trade. So, and the first one is let me just make this place a whiteboard. Confluence is number one, psychological level, psych level. If you're very conversant with my channel, you will know how I come about psychological level. But if you're not, I'm gonna break it down as well. Fibonacci. Number 3, it makes use of a candlestick or chart pattern. Candlestick or chart pattern. Number 4, trend line. Number 5, can somebody remind me? Key levels. And then number 6, which is the final. I need somebody to remind me of this. One of you guys, I want to be sure that you guys have been watching my channel and you're very conversant with it. So I want to see, I need one person to mention the last confluences, which is the most important one. What? Correct. CNBC. Yes, you that you're watching, you got it. You that you're watching me right now, yes, you're the one that answered that. You got it. CNBC, which is the father of all. Yeah. So now I'm going to be applying all these 6 confluences, on the chart you're seeing on my screen here. I'm going to be taking them one after the other, but I'll be very fast so that because I don't want the video to be too long, and I'll still be doing the top down for what you guys should be expecting next week. So now the first one is our psychological level. You just come to your trading view. This number 2 after this plus, this one, just click on the small arrow in front of it. You will see horizontal line, bring it out. Tap on your screen, bring another one, tap on your screen, bring another one, tap on your screen. I want to do like 4. Tap on your screen. And you can also clone it. You can right click on the line. Once you right click on it, you can clone it. If you click on clone, another one will pop up. You can see now we have 5. So let's make use of this 5. Yeah, what are psychological level? Psychological levels are lines, that 100% pips interval. It's an horizontal line that is drawn on chart, which is 100 pips interval. You don't need theory, we need practical. So now let's do this one. You will get it now. This is 40. It has to be a round of number. This one is 42,800. The next one should be, we are coming down. It will be 42,700. If you are going up, it will continue 800, 900, 43. You understand? But if you are coming down, it will be reducing. And this one will be 42,600, right? 42,600. And the next one will be what, please? I need somebody to answer. 42,500. Correct. You got it. Yeah. And this one is what? 40 what? 42. Tell me now. 400. Correct. You got it. Some of you might be thinking that, but the lines are too close. They are not close. It's because we are on 1 hour. It's because we are on 1 hour time frame. So you that you're watching, apply this same thing on your chart as you're watching. So we are done with psychological level. And I used to say, if you want to take a trade, make sure you take your trade on psychological level. At every psychological level, the chart, the trend of the market or the chart must always react to every psychological level. You can do your back testing to get this. Now, the next one is going to take me to Fibonacci. What do we call Fibonacci? Fibonacci can only be used in a trending market. Let's say we have an uptrend, and you miss the beginning of the market now, and you want to enter the market again, then that is where Fibonacci comes in. Let's say this one now, we miss this entry. We're now looking for another opportunity to take the market up. Now, then you bring out your Fibonacci here, Fibonacci retracement. You put it down from low to high. Yeah, for US30, we make use of 3 Fibonacci level, which is 38, 50, and 61.8. This one. So if you look at this now critically, you will see that we missed this entry and we are looking for another one. When it got here, what happened? There was a retracement to 60, 61.8. We take our entry here. We take it up. So another one, that is one. Let's use another one also. Let's take another one. If you are buying, you take from down to up. If you're selling, you take from up to down. It's as simple as ABC, vice versa. So this one, you take it like this. This another one, from here to here. From here to here. And what do we have? 50 fib level. And we take another entry. We write it up. So do you understand? Please make sure you backtest this. I don't want it to be too long. That's why I'm a bit fast, because I have a lot to cover. That is all about Fibonacci. Now, when you talk about candlestick or chart pattern, talking about candlestick or chart pattern, it's I actually dropped a book for free on my Telegram. Please, if you don't have that book, check out my Telegram channel. There's a free book I dropped there, which is Japanese Candlestick. I will advise you to read that book. It's very, very important if you want to understand chart pattern and candlestick, how the formation of the candles, how candles are formed, the morning star, the evening star, the engulfing and all that. You're going to enjoy it. You're going to understand it more. So For every candle you see here, there are some that are reversal candle, there are some that are continuation candle. So I'll just advise you to go over that. That's that about that. I'm moving forward to trend line. Trend line, trend line is a line that you just draw to connect channels together. When you draw a trend line, a valid trend line can be identified when it connects at least two channels together. Let's say this one now, from here to here. Is this a valid trend line? Yes, we can say this is a valid trend line because it's connecting one, two. Do you understand? But it will make more sense if we put it here. From here down to here. It's connecting one, two, three. And we are waiting for breakout. What happened here? There was a breakout and the market dropped down massively. Do you understand? So this is the concept of trend line. You can do more on your chart. Please backtest and do more on your chart. That is for bullish. Now let's look at another one here. Look at this one. What do you see? One, two. When the market got here, three, what happened? There was a drop massively. And the market retraced back up again. What happened? There's a drop here again. Do you understand? That is the concept of trend line. Yeah, if you want to know more about this and if you want to know the depth and the more details, I mean the deep details, then you can decide to take it further by joining my mentorship. I've included the 1 month, 3 months, and lifetime. So, which is very affordable. You guys can check my Telegram channel to see more about it. If you want to know a lot and you want to know the depth of this. So now when we talk about key levels, so key levels are levels that we draw. I call it zone or key level, where we have multiple rejection on the market. If you look at this point now, this place, we can say this is a key level. The market was failing to break it, failing to break it. That's a key level. If I'm doing my top down, my weekly outlook, you will understand it more. And we can also say this is a key level. Look at this place. Look at this. Look at this. The market got here, dropped down. What happened here? Failing to break. Look at this. Failing to break. There was a fake out, went back up, and it break eventually. And here, where the market is presently. So, and this is another key level. This place. This is another key level. There are so many key levels, Anywhere you have multiple rejection, that's what we mean by key levels. And now, last but not the least is, I'm moving fast because I don't want the video to be too long. That's why I'm moving fast and I'm doing two things together. That's it. So the last one is CNBC. This one is very, very deep. It's very deep. I'm not going to lie to you. It's very, very deep. So we check our Forex Factory for news. We check our Forex Factory for news. Just go to your forexfactory.com. So there are so many news you see on Forex Factory. Let me try to load my chart. On Forex Factory. So let's say for this week now, for this new week we are going into, let me just load it up. For this new week we are going into, you just apply in settings. So what will happen? So anytime you see red, just know that it will affect the market, especially when you see USD, because we are trading USD, we are trading our tech, which is US30. So, and it has business with USD. So you have to, anytime you see USD, just know that it will be effective on the chart, And now for CNBC, there are 30 companies. Why we call it US30 is because it comprises of 30 companies, 30 tech companies. So you can go to cnbc.com, cnbc.com, cnbc.com. So once you get to cnbc.com, you just click on US. So when you click on US, it's loading. Yeah. When you click on US, you can see that this DJI, that means this one is US30. This is US30. And then for the 30 third company that comprises of it, it's going to load them out. We're supposed to have them. CNBC.30. This one. CNBC/.30. So it's going to load out all the 30 companies. These are the 30 companies that comprises of US 30. So out of these 30 companies, 10 are most effective. You can go to Google and search what are the 10 most active companies on US 30. And we also have 5, and we also have the top 5 also. So you understand? So these are the 30 companies that we look out for before we take a buy or a sell on the market. You understand? So this is all I can explain to you on CNBC. It's very, very deep. That's just the truth. It's very, very deep. So if you want to know more, just like I've told you before, you can join the mentorship program. All right, guys. So this is where I'll be dropping it for today. And now let's move forward to what we should be expecting from the market next week. All right, the top down analysis for next week. Let me just give you guys what you guys should be expecting next week. Just like I explained before, this is key level 1. This is another key level. Mind you, this is weekly. We are on weekly right now. We are on weekly, so I'm trying to mark out my key levels on weekly here. So now I take it down to what? To the daily. I take it down to the daily, and on the daily, what do we do? Can we see a trend line? Okay, there is a trend line here on a daily. I have a trend line here, which presently we have a third touch here. Let me just make it 2. Yeah, presently we have a third touch here on the trend line, and I can have a channel here from here to here. We can have a channel from here to here. We can have a channel, but let's remove this. Let's just remove this. So we have this. Now, moving forward to 4 hours. Moving forward to 4 hours. So what do we do now is, what we have to do now is this. Yeah, this is where I'm going to be dropping it. This is where I'm going to be dropping it. So now, if you look at it critically from 4 hours, we have a key level here. On this point, we have a key level here. So now, what I'll be expecting from the market this week is bring out our Fibonacci and see if we can actually get something out from it. Yeah, that is 60 fib level. Okay, perfect. So now I'll be seeing this on the market when the market open. I'll be expecting some drop here, down, up here, maybe back up. If the market should break out from this place, if it should break out from this place, from this particular point, if the market should break out from here, just know that it's going there. It's going to that place. But if the market should drop from here, drop and break here, just wait for retracement. If it should break here, wait for here. You have to be very patient. We'll be taking it down to this point. This is what I'll be expecting from the market this week. So based on what I'm seeing on the chart, you have to be very careful. You have to be very, very patient. This gap I spoke about 2 weeks ago has already closed here. The gap has already closed. So please, we have to be very, very careful. We have to be patient. And please keep yourself busy with the news. The tariff between US and China is already paused for 90 days, So the TA is back, technical analysis. So let's just keep ourselves busy with the chart. All right, guys. So if you want to join me live, I'll be trading live on Tuesday with all my mentees. So to join us once again, just click on the link on Telegram and join my Telegram. From there, you will know what to do. All right, guys. So till I come your way again, this way I'm going to be dropping it for today. Till I come your way again, this is just YK signing out. Bye for now. Peace out.